Now we are going to see question number 6. Paid rent in advance. So whenever you pay rent in advance, it is known as prepaid expenses. You pay this amount from the cash. Remember that you pay from the cash, and in the asset side only you have to write one additional item, that is prepaid expenses. Now I'll tell you how to put this accounting equation in the formula. Transaction number 6, it says paid rent in advance. I told you that you have to always take the items that is there in the above transaction. So first one is cash. You pay rent from the cash, no? So you had 4,45,000 and now you are paying rent worth of 8,000 from this cash. So from the cash you have to deduct 8,000. 4,45,000 minus 8,000. So now your cash will be only 4,37,000. Second item, nothing is being said regarding printer. You will copy the same amount. Inventories also, it will remain the same, 20,000. Account receivable, it will remain the same, 5,000. Now there is one additional item, that is prepaid rent in advance. I told you prepaid rent is always asset, so you should write here. You just write prepaid rent. It is asset, so you are writing in the asset column. Trade payable, nothing has been said, so till now you did not pay credit, so you have to write in the liabilities side. Now we'll find out what is the owner's equity. So what you have to do, add cash amount, so it is 4,37,000 plus 50,000, that is for printer, plus 20,000 plus 5,000 plus 8,000. Since you have to pay money to the supplier, you have to minus this amount. Trade payable, you have to always minus 25,000. So capital will be 4,95,000. Asset is always equal to liability plus owner's equity. Now we are done with transaction number 6. We'll move to transaction number 7. Now we are in transaction number 7. Salary is outstanding. It means salary due, unpaid. Now you have to pay. Okay, so whenever you see the word outstanding, it means due, unpaid. So what you have to do, you have to pay it later. So salary outstanding will become liability for you. And when you pay liability, even the owner's equity will decrease. Salaries outstanding will come to the liabilities. At the same time, from the owner's equity, you have to minus this 1,000. Now I'll tell you how to put in the accounting equation. Transaction number 7, it says salaries outstanding. Nothing will happen in asset when the expense is outstanding, so you just copy what's there in asset. So 4,37,000, printer 50,000, inventories 20,000, account receivables 5,000, prepaid rent, it is 8,000. Whenever the expenses becomes outstanding, it falls under liabilities. Before only you had one liability, trade payable. Now with this transaction you have another liability, that is salary outstanding. Why it is liabilities? You have to pay, that's why it is liabilities 1000. So capital, you are having 4,95,000. You have to pay liability from this capital, no? So minus 1000. Now owner's equity, it will be 4,95,000 minus 1000. So it is 4 lakhs 94,000. If you want to cross check, what you can do, you add all the asset and you add both this item. You should get equal amount. Now we'll move to transaction number 8.